Insurance has always been about managing risk, predicting outcomes, and providing a safety net for individuals and businesses. But as we move further into the digital age, the challenges facing the insurance industry are also evolving. From rising customer expectations for personalized services to the increasing complexity of risk factors in a globalized world, the need for innovation in insurance has never been greater. And this is where generative AI comes into play. Welcome to the Analytics Insight podcast, where we delve into the technologies and trends that are transforming industries and redefining the way we do business. And I'm your host, Priya Dhyarani. Now, it's nearly impossible to go a day without hearing about the potential uses and implications of generative AI. Well, for a good reason, I would say. But generative AI has a potential to not just repurpose or optimize existing data or processes. It can rapidly generate novel and creative outputs for just about any individual or business, regardless of technical know-how. Now, it may come as no surprise that generative AI could also have significant implications for the insurance industry as well. So let's welcome Stan Smith, CEO and founder of Gradient AI, to talk on the future of generative AI in insurance, specifically its application in claims management and underwriting, and how it can empower insurance with what we call as the next best action. Hi, Stan, how are you doing?
Great, Priya, and very happy to be here and appreciate the opportunity.
Great, thank you so much. It's a pleasure for us likewise to have you on a podcast today. So before we dive deeper into the applications of generative AI in the insurance industry, we would like to know more about Gradient AI. So if you could tell us more about the organization, its specialization, or particular solutions the company is offering.
Great, Priya, happy to. Just the background of the business, this is my sixth startup, and what I've learned in the past was vertical applications, in other words, focused on a specific industry, allows companies like us to build more specific purpose-built solutions for our end clients, because we're not doing it as across multiple industries, banking, legal, and insurance. We're just focused on insurance. And when I started the business with that focus, we first engaged on the area that folks want us to focus on were in the property casualty space, but on the casualty side. And why casualty? It's where the highest cost claims, highest risk underwriting occurred, where if a delivery truck hits someone's mailbox, that mailbox can cost a few $100s. It's not a big risk to the insurance company. They'll settle that claim, pay off that damage to the mailbox, and move on. If someone is hit by your delivery truck, a person can be injured. It could be a small claim, a medium-sized claim, or what they sometimes refer to as a nuclear verdict claim, where it could be millions of dollars. And that's where I think the insurance companies have focused their time and attention with us, is understanding the risks of these casualty exposures on the underwriting side, and also then managing the bodily injuries on the claim side. That focus around the medical information and using AI in the beginning of the business, back when we started in 2014, these were what we call narrow models. But we started there on the casualty side, but because we're using healthcare information, diagnosis code, treatment codes, and drug codes, companies saw that and suggested we look into healthcare as another application for AI. And so we've also moved into the healthcare market as well, because even though they're very different markets, the data that is used in both vertical portions of insurance, P&C versus healthcare, it's the same data. And therefore, it's the adjacency is probably not obvious to everybody, but from a data and a data science and an application perspective, it is a lot of similarities and some really interesting things we can do by working on both those areas. But as you said at the beginning, we focus on underwriting, new business, renewal, and also claims management. So how do you price risk before you put it on your book as an insurance company? And how do you bend the cost curve once claims occur, that you can deliver a better outcome to your customer by having a faster claim process, a faster claim payout, but also a better outcome for the injured person. In other words, get them the best care as soon as possible, but also pay less as the payer, because you're getting a better, healthier person returning to work, returning to life faster. So in our view, we're trying to drive win-win. If the insurance company does their best, they'll get a great outcome, and the injured person also gets the best outcome possible.
Great, that's pretty impressive, Stan. Thank you for sharing with us about Gradient AI. Moving forward, we would also like to know more about you, Stan. If you could tell us your role as a CEO and founder, what are certain aspects that you look into and certain contribution towards the company?
It's an evolving role. When you start, I started this business in a large company. I started in a large global actuarial firm as a separate business unit. But I started the business by myself with no staff, no nothing, and I had to go find the first client and first of all find the first business problem I could solve. It turned out to be a workers' comp claim engagement, but I had to figure that out. So my job was to identify not just the big market, insurance, but the initial market turned out to be workers' comp claims to go after, and then find the first client that had a problem that they were willing to pay money to solve, and build that first product or build that first proof of concept, because that's what it was. Prove the value of AI. And this is, again, at the stage where these were narrow models, not Gen AI, but narrow models that could deliver some value and begin the journey of building this company. Subsequently, in 2018, I bought the business from this global actuarial consulting firm. They wanted to keep doing consulting. We wanted a software product business. It was both parties had just a better focus by being separate. So I bought the business and subsequently have raised a substantial amount of outside capital to build the company, and we've had great growth since we spun out. And so part of my job is that from just the beginning, the initial market product fit that you go after. That was my role at the very, very beginning. I've sort of kept my product involvement from there to today. But as we've grown and added well over 100 clients over the last 5 years since we spun out, my job will be more managing others that might have product responsibility and individual business unit responsibility. So it does evolve, it does change. My favorite mantra with my team is what got us here won't get us there, and there's the next level of growth that we're looking for. So we always have to evolve. And I think my job really as the CEO is to always be thinking about how do we have to do things differently tomorrow based on what we did today and the results we're seeing today, and how to improve it day by day by day, and drive better execution across the firm. I think that's the thing I think about every day, all day, is just better execution so our clients get a better solution, they get it more cost effectively, and they get better results.
Great. I think that's pretty impressive, and your journey has been quite fascinating, I must say, Stan. And I also wish that you would soon unlock some growth opportunities and scale your business effectively. Moving ahead, I think let's start with claims management. I think it is one of the most critical and resource-intensive functions in insurance. The claims process is often like a pain point for both insurers as well as policyholders, because customers want the claims to process quickly and fairly, while insurers are under pressure to manage costs, detect any frauds, and even ensure compliance with regulations. So when we're talking about all of these things, how do you see Gen AI reshaping this entire landscape of claims management and even underwriting for that matter? Or what are certain specific challenges that Gen AI is addressing?
So Priya, this is a question that, when Gen AI came out, I didn't realize it had the answer to a question I was being asked by my clients from the very beginning. That first client we worked with, the question they had for us was, can you identify a claim? The term was a creeping catastrophic claim. That means it's a claim that looks benign. Many of these tend to be soft tissue injuries, sprains, strains, stresses that are hard to diagnose. You can't image a strain with X-ray. You can't see it if there's no damage. You can't see how badly the muscle or the tendon's been pulled. Or again, if there's damage, you can see it with an MRI or something like that. But if it's just uncomfortable, pulled muscle, for example, it's just really hard to understand the level of pain the person might be, suffering and so forth. But they had a hard time diagnosing. But if you go look at the numbers, less than 10% of the claims in say workers' comp, for example, generate over 60 or possibly even over 70% of the total losses. So a strong concentration and a very small percentage of claims that will drive a lot of the costs from the carrier. So they are reluctant in some cases to move too quickly because they don't always know which claim is which. Low risk claim, maybe I can pay that off quickly and close it down, or high risk claim, maybe I have to handle it differently. The more confidence we thought we could give them, that would benefit them. So we actually did show that we could identify claims much sooner and much more accurately with the adjusters that were either low risk, can be handled in a very efficient manner, or a very high risk, and should be handled with your most experienced adjuster. So we could kind of look at that way. But from the very beginning, when we started identifying these claims very early, the feedback from the client was, this is great. I now know this claim is going to be worse than I expected. I see the accuracy of the model. They're not always perfect. They never will be, but they're very accurate early. And I can have the confidence that, out of these 10 claims the model thinks are going to be very complex. 8 or 9 out of those 10 are absolutely those kind of claims, and so I can act on all of them very confidently. But the first thing they said after that was, but I've never been able to look at a claim this early with this knowledge. And so I'm not sure what to do. And you're not helping me. And they basically kept coming back to me and saying, okay, Stan, you told me this claim is going to be worse than I expect. Now, what am I supposed to do about it? And honestly, Priya, with just these narrow models, we had no real answer. The other very specific thing I should lead into before I talk about the Gen AI piece is we have a contributory business model. So our clients tend to give us their historical files, both underwriting claims, and that allows us to sort of build models on this data because it's better. More data with AI usually works better. But fundamentally, what's been great about that data set, we have tens of millions of claims and policies now. With Gen AI, we suddenly realized that we had the chance to not only say, here's a claim that's going to cost way more than you expect, or that you normally would realize at this, at day 10 or day 15 or whatever. But now with all this data and Gen AI, I can not only say what you should do about it, so that the now what answer gets now a question gets answered by saying, okay, here's what the data would recommend you do about this claim at this point in time, number one, and then the why you should do this. If you choose this strategy, this intervention, this treatment, this protocol, whatever it is, the Gen AI can say, here's what you should do, that recommendation, and the why. Here's the impact of that decision on this claim at this point in time. It will drive X% reduction in cost, Y% reduction in duration, and give them basically the rationale, the support, the ROI argument, if you will. If I'm going to refer this to a third-party vendor that has this service that may cost me hundreds of dollars or maybe even thousands of dollars to apply to this claim, I'm looking at the argument that says if you apply that service at this time on this claim, I could save 2 to 5x of that cost of that service on this claim. And so that's one of the things that this Gen AI allows us to do. It also works in the low risk claims where it can actually say this claim is going to stay. The argument is, why should this claim be handled in an expedited manner? It's going to stay below a certain cost threshold. It's going to last less than a certain duration, and it's going to have fewer than X number of medical transactions. So again, in English, it shows the human why the argument is this claim could be settled or closed, paid and settled right away. So better customer service. And so it supports, sort of both ends of that spectrum in a work comp setting. Underwriting is another interesting thing with Gen AI. On the healthcare side, I'll use an example there. In the past, when you looked at a group and you saw people in that group, you're doing group underwriting for healthcare. If you saw conditions and drugs together without any knowledge of what's really going on with that person and their treatment, you didn't know if that condition and drug was in diagnostic phase. They'd just been diagnosed with this condition. Was it in treatment phase? In other words, where you're expending lots of money to control the condition, to cure the condition, or any number of different ways you might be sort of attacking that situation for the benefit of that patient, or are they in maintenance phase? In other words, the treatment has already occurred. They're in remission if it was cancer of some sort, and the maintenance phase could be very, very low cost. So you take the same condition and the same drug. If you don't know the scenario with just a narrow model, it says, okay, that condition, that drug is going to be $400,000 a year. With Gen AI, we bring that same information in front of our underwriter, say, this person has already been diagnosed, their treatment ended last year, and they're now in maintenance phase. So when the underwriter, rather than saying, I'm going to decline to quote this group because of the costs of that combination of condition and treatment, they're going to say, aha, this person has gone through that already. They're now in maintenance mode, and that condition, that drug in maintenance mode is $10,000 a year, not $400,000 a year. So they can move forward with confidence. In the past, they would have to send that case to a nurse to have them try to understand what's really going on, and was that a risk they could take on from their underwriting perspective. And so that's another very straightforward, very powerful application that we have in Gen AI for our clients on the underwriting side.
Great. I think that's pretty interesting, and it's really insightful to hear how Gen AI is driving such transformational changes in claims management and underwriting. And you really touched upon some aspects by sharing these examples that how it can help streamline processes and reduce inefficiencies, which kind of really makes me wonder about the specific challenges the insurance industry has faced in these years and that too for so long. So moving ahead, I think everybody's talking about this next best action in insurance industry as well. It's more like a powerful tool that Gen AI brings to the table. Now, the idea here is that Gen AI can analyze a customer's data and interactions in real time to determine the most appropriate next step, whether it's offering a policy upgrade or recommending a risk management strategy or even suggesting preventive measures to avoid a claim in the first place. So, how can you help us understand how can insurers use Gen AI to predict and even recommend the next best action for policyholders and claim adjusters?
So, a very specific example, I sort of touched on it a bit. One of the things that's going on, though, I think, Priya, just to bring sort of the big picture together, and I was just on a prospective client call just earlier than this. I consider this what I call the perfect storm in the insurance industry, between a combination of a lot of experienced folks are aging out of the workforce in the insurance industry. So they're having some challenges finding and replacing those people because they're having to hire, brand new graduates or less experienced people to replace people that have 20, 30, sometimes even 40 years of experience that have been managing claims or doing underwriting. So that's a challenge they've had. With the pandemic, and all the remote work that's going on. In the past, the way they would mentor an adjuster or an underwriter, they'd have them in the next desk or the next cube over from an experienced adjuster or underwriter, and they could work together. The experienced person could hear what the other person was saying and say, hey, when they ask that kind of question, I heard your answer. You might want to think about a different answer, or you might want to do something different in that case. And so it was in the office, side by side, collaboration, mentoring, observing, interacting, and it was a way they could kind of transfer knowledge and experience from the more experienced people to less experienced in a very consistent way that, again, how many of the most experienced people had already had it handed down to them. Well, today we've got clients who have seen a lot of, again, retirements, and they're having a hard time retaining new hires. I've got some clients that see greater than 50% attrition of their new hires within the first 12 months of bringing them on. Why? They're working from home. It's hard to retain folks if they're not that excited about what they're doing, or someone offers them a few bucks more an hour, they'll just pick up and leave. So it's a perfect storm out there for us. So how can they use Gen AI for on the adjuster side? Think of it in the form of almost a co-pilot, where we can sit side by side with the less experienced and also the high experienced adjusters and identify things they may want to consider. The models may show them things that are not necessarily what they should do, but things they could do. So it may not be a strong recommendation because it may be early in the life of a claim where the signal's not that strong yet about one strategy versus another, but it certainly can make them aware of things they may want to consider in the future and why. I'll give you an example. Typically, an adjuster may want to do something on a claim before surgery if they know surgery is going to occur, which we have models that would predict that surgery will occur on a claim, they may think, well, should I get a second opinion? Should I get a peer review on this situation before I have this person get surgery on that injury? Or should I go for independent medical exam because I'm not sure that's the right strategy to have surgery or some other complicating factor? So that's where the models can actually give them reasons to consider something and the why, as I said before, and allow them to have that sort of co-pilot mentor right at their desktop in their claim system to keep them focused on a better outcome for that claimant and for their employer is paying the bills. And the same kind of thing on the underwriting side, where they can get the information that allows them to understand more about the risk than they would otherwise, and have it take their experience and their training with this sort of co-pilot to suggest maybe that they should price this policy a little bit differently because there's some risks that may not be apparent just from the information that's on the application for a quote, but the surrounding environment may cause this particular policy because maybe the area that the business is located in may be high crime, and for certain types of exposure, crime would matter a lot, or it may be a low crime area, so they should get a discount. And so these are things that we can give the underwriter some insights, again, in English, and have them consider it as part of their decision-making process in a very efficient manner.
Well, that's pretty interesting, and it's really impressive to think about how the data can drive such precise actions, whether it's helping a customer choose the best coverage or guiding an insurer on how to proceed with a claim. And what I really find particularly compelling is potential or the power of Gen AI to learn from each interactions of customer discussions and making its recommendation even smarter over time. I think that's pretty. I think that was pretty much needed in the insurance industry. I would say. Um, Now, moving ahead, I think it's also understandable that insurers are trying different approaches to deploying and managing new technology. For example, Gen AI. Now, over time, we also expect firms that balance a clear top-down strategic vision with grassroots experimentation that will give them the best results. Now, such flexibility will be necessary to harness the full potential of Gen AI and navigate both the current and future challenges. But again, I don't think that's it's really sufficient enough. I think there are certain steps or certain factors that you really need to consider when you're deploying Gen AI in an insurance industry, which itself is called as a very complicated industry. So, what are certain key success factors that insurance should look while implementing Gen AI in claims management or underwriting? And are there any common pitfalls that they should avoid?
Okay, so two parts to my answer. First, I think anything we do, we try to focus on high impact solutions, and by high impact, what that means in the insurance space is we want to look at how can we impact their combined ratio. The combined ratio of insurance companies is made up partially of the dollars they pay out in claims, and then the remaining dollars from their inbound premium that they retain to pay salaries, benefits, overhead, and profitability. And so we think about claims and underwriting from how much can we impact in a positive way, how much can we improve the combined ratio of our clients. In the area of both claims and underwriting, we conservatively estimate that we'll improve the combined ratio from just underwriting or just claims by sort of a minimum of a couple points and possibly a lot more when we've had very substantial cost savings examples from a number of clients. In fact, when we were again at the global actuarial firm, I did an ROI analysis where I brought in a third party actuary. I paid that person as a consultant to come in and work independent of us directly with the client to assess the actual cost savings they had experienced. And they found this particular client over a multi-year period had averaged about 8% improvement over, I think, about a 3-year period, but it had been as high as 11% in 1 year of reduction in their losses from the claim side. So that was just on the claim side. And we've done similar analysis for our clients on the underwriting, and they've seen anywhere from 2 to above percent improvement on the combined ratio. So and we think about this. Clients, companies have many options to spend their time and their money. So it's really about where should they spend that time and money to get the highest return on that investment of effort. And we think we want to be positioned as a high impact, high ROI focused company that they can turn to help improve their performance. And our impact has been higher with companies that have greater challenges. So when we come into companies that are having some challenges with profitability or some other things, that's where we see our impact at the higher end of the range from an ROI perspective.
Well, yes, I think that pretty much makes sense, and thank you for giving that detailed breakdown. It's pretty clear that successfully implementing Gen AI in claims management or even underwriting requires more than just adopting the technology. It's also about aligning it with the broader organization goals, business goals, and data readiness. Just one quick question with regards to your response, Stan, is that um, are there any particular regulatory challenges as well when we are trying to adopt Gen AI in the insurance industry?
So Priya, one thing I did not answer in your first question is you asked about the pitfalls. So do you want me to go back and answer that quick question?
Yeah, that would be.
I think that the number one thing that we have learned from doing this well over 100 times now is to make sure we understand collaboratively with the client's leadership and their team, what change management is necessary to sort of help them adapt to and adopt these solutions. So think about the way they can think about doing things differently than they've done in the past, and how do we augment them and help them do things differently, do things better, do things more efficiently, get rid of some of the busy work that's also takes up so much of their time, and give them more opportunities to use their experience, their knowledge, and skills to drive better outcomes. So I think that change management factor, this is something new, this is something different, And I think we all know as we get a new phone that has new features and new functionality, sometimes you have to think about things differently, and we use things differently. And I think that's some of the things we have to bring to the table. So I think change management is really important. To your question on regulatory environment, insurance, as a general statement, is a regulated industry, highly regulated industry. Many states have their own regulations. We know through all the press and all the headlines you see, there's a lot of concerns and worry about AI and use of data and all sorts of different things around artificial intelligence that everybody's talking about. We're very much on top of the regulatory environment, and we think that there's only really two ways to approach it. One is be proactive, engage with the regulators, understand what their concerns are, and meet them head on and address them with security, with transparency, with the ability to ensure that we can identify, measure, and eliminate bias and some of those things that people are concerned about. And we are doing that, actively doing that kind of stuff. Or you can ignore it and hope it goes away. It's not going away. It's going to be regulated space for a lot of right reasons. Some of it's a little bit kind of too much, I think a little bit too much worry about some of these things. But I think that the seriousness of things like bias in data can be under something that is real. And we think we can identify it, measure it, and eliminate it by being proactive. And that's the way we're approaching it.
Right, yes, and I think this proactive approach kind of transform the roles of each insurer who is trying to do claim management and underwriting and providing such services to customers. And it's kind of really important to have a proactive partner, specifically when it comes to the insurance. I think it's pretty clear that the advent of AI has already begun to change this landscape because over the past decades, insurers have started using AI to streamline their operations, enhance accuracy, and even improve customer experiences. So, I think AI-driven analytics are now like a mainstream commonplace, enabling insurers to better predict risks, detect fraud, and even automate certain routine tasks. But while these applications of AI have been transformative, I believe that they are just the tip of the iceberg right now. One last question for you, Stan, that would be: what are certain trends that you foresee in the application of Gen AI in insurance, or particularly in claims management or underwriting?
So what I see all around at almost every company I talk to, Priya, both our clients and our prospects, they're using a lot of Gen AI themselves for what I would call to assist their workforce, to reduce the mundane tasks, to summarize a request for quote submission. So instead of me having to read 4 or 5 pages of information, build a little Gen AI tool that summarizes it so an underwriter can see in a quick outline type of business, size of business, a loss history, things like that, so they can see real quickly, we're not going to take this on. This doesn't meet our risk appetite, or I should move this along to be reviewed by an underwriter and process and so forth. That's the assist. And I think there's going to be a lot of companies that build some of these assistants internally because they're not that hard to build, but they're not robust enterprise level solutions. The second area is going to be where companies like ourselves come in, where we do this for a living. This is our focus. We also have data that's external from any of our individual clients. So if you really want to understand what's the next best action, if you use only your data and you use Gen AI, you're only going to know what the best thing you did on this type of policy review or submission or on this kind of claim with this certain set of circumstances. With our larger data set, we can pull from multiple companies and understand what the best action across many companies in many states and many lines was in this particular case. So we have a more robust data set. So I think that's really augmenting the staff and making them more effective, more efficient. I really want to, where we have the greatest impact from both the financial side and the culture side is when folks start to see themselves as empowered by these tools to have a better impact on the performance of their company and get the recognition, whether it's verbal, whether it's amongst their peers or in the financial side with raises and bonuses and other things, where they can start to see, hey, there's now folks can see the value that I'm delivering with my expertise in this environment, and I'm getting rewarded for that. Our business is growing, my bonus is better, I'm getting promoted. That's where we see the augmentation here being exciting and impactful to take people to the next level where they can bring their careers, and Gen AI can help them along. We're not going to do the job for them, we're hopefully going to help them do the job better than they could have done on their own, and so they can see the success. We make them all more successful. We'll be fine.
Well, definitely, I think that's a really exciting glimpse into what's on the horizon for Gen AI in insurance. And I think insurance organizations have a remarkable opportunity to create substantial value and leverage the potential of generative AI by making well thought out investments. And as I think in the entire conversation that we discussed, the integration of Gen AI into claims management or underwriting, and for that matter, even customer engagement, represents a very significant leap forward for the insurance industry. And like you mentioned, by improving the efficiency of employees or increasing data accuracy, I think Gen AI is helping insurers not only meet the challenges of today, but also prepare for the opportunities of tomorrow. Well, thank you so much, Stan. It was a pleasure having you with us on a podcast today. I think we got to know a lot about how Gen AI is changing insurance and what are certain aspects that insurance agencies should take into consideration when they're deploying Gen AI.
Priya, I appreciate having the chance to talk to you and to share some of the things we're doing. And I look forward to the feedback from your audience.
Definitely, definitely. Thank you so much, Stan. So, this is for our listeners. Thank you for joining us on this episode of Analytics Insight. Stay tuned for more episodes where we explore the technologies and trends shaping the future of business and innovation. Thank you.